Bitcoin is down 35% from the all-time high. And if you are scared, that exactly what smart money wants. Because historically, the biggest Bitcoin profit always start after a 30 to 40% crash. Here's the data. Limited supply, guaranteed future demand. Here's the first fact. Bitcoin is the only global asset with a mathematically fixed supply of 21 million. The numbers of millionaires in the world is over 60 million. Even if every million wanted just one Bitcoin, there is not enough supply. Scarcity and rising global adoption means long-term upward pressure. When something scared drop 35%, smart investor buy, not panic. Number 2, big players are buying. Now here the part everyone ignores. One of Wall Street biggest Bitcoin buys, a warning or a signal to join the cryptocurrency revolution. BlackRock, Fidelity, ARK's ETF products show institutional accumulation. This has never happened in Bitcoin's history until now, and it's a massive signal. ETFs are pipeline that move billions of dollars from Wall Street into Bitcoin. Goldman Sachs Bitcoin ETF investment sent a powerful signal about the future of the cryptocurrency. When they buy, it means one thing: they expect higher prices long term. It might have taken a while, but the institutions are arriving, and with their arrival, their deep pocket signal that Bitcoin is not going anywhere anytime soon. Number 3. Bitcoin does not crash your portfolio, your emotion do. Most retail investors buy when media talk bullishly and sell when it's down 50%. In contrast, smart money buy the fear and sell the greed. Michael Saylor accumulate Bitcoin during crashes. Today, his company holds BTC worth billions. Lesson: to win the Bitcoin, kill emotions. Follow logic, not hype, news or social media. Number 4. Want to predict Bitcoin next big move? Watch the 4-year cycle. Bitcoin follows this pattern every 4 years. 2012 almost 100x within 2 years. Then 2016 45x within 2 years. Next 2020 16x within 14 months. Next 2024 2x within 18 months. Now 2025. What you think? History may repeat or not? Lesson: cycle not guaranteed, but patterns help you enter with strategy, not fear. Number 5. Use volatility to your advantage. Volatility is not your enemy, it's your opportunity. Look at this data. Bitcoin has dropped over 50%, more than 8 times in 14 years. Long-term investors used each crash to build wealth. Example, in 2021 crash, Bitcoin fell almost 80%, but then rebounded with a 600% return over 3 years. Lesson: use crashes to grow, not to quit. The new cycle opportunity. Bitcoin is down 35% from the all-time high, but the fundamentals, the institution, the cycle, and the data all point one direction. If history repeats, this is what early accumulation look like. So don't follow the fear, follow the data. Always remember, smart money buys when the chart looks scary. The highly proven Bitcoin multimillionaire checklist. Anyone can follow, no degree, no experience, no technical knowledge required. Number 1. Follow the crash equal to opportunity. Buy only during 30-50% dip. This is when institutions accumulate. Historically, the highest ROI enters always during fair periods. If the chart is scary, it's usually the bottom zone. Number 2. Hold for one full cycle, minimum 4 years. Every single past cycle rewarded holders. Short-term noise, long-term exponential growth. Halving create predictable supply shocks. The mistake 98% make: selling too early. Number 3. Set a 5 to 10 years wealth target. Bitcoin adoption curve is still early. Institution just entered. Global millionaires more than Bitcoin supply. Small step, massive compounding. Number 4. Protect your Bitcoin like a pro. Store long-term BTC in a hardware wallet. Keep seed space offline. Don't trade on shady exchange. Protecting your crypto is part of becoming wealthy. If you found this video valuable, hit subscribe and press the bell icon. No hype, only logic.